Hi, my name is Astron. Today I will present to you our English Accounting Module 13 subject. What is stock market? Okay, for introduction, I will tell you the stock market. Uh, the stock market refers to public market that exists for issuing, buying, and selling stock that trade on stock exchange or over the counter. Now I will tell you a little bit of background of stock market. Is a story of stock trading. Although stock trading dates back as far as the mid 1500s in Antwerp, modern stock trading is generally recognized as starting with the trading of shares in the East India Company in London, the early day of investment trading. Throughout the 1600s, British, French, and Dutch government provide a charter to a number of companies that includes East India in the name. The formation of the East India Company in London eventually led to a new investment model, with importing companies offering stock that essentially present a fraction ownership interest in the company. Company shares were issued on paper, enabling investors to trade shares back and forth with other investors. But a regulated exchange did not exist until the formation of the London Stock Exchange (LSE) in 1773, the beginnings of the New York Stock Exchange. Enter New York Stock Exchange, or NYSE, established in 1792, though not the first of U.S. soil. The honors go to Philadelphia Stock Exchange (PSA). So in NYSE is not the first stock exchange in America. The NYSE rapidly grew to become a dominant stock exchange in the United States and eventually in the world. Then, what about the modern stock trading? Domestically, the NYSE saw major competition for more two centuries, and growth was primarily fueled by an ever-growing American economy. The LSE continued to dominate the Europe market for stock trading, but the NYSE became home and continually expanding number of large companies. Then, how the stock market works? Stock market players are several players. The first is the investment bank. The investment bank is the party that issued the first initial public offering of company that offer their shares for the first time. Then stockbroker. Stockbroker is the party that trading the stock, and investor. Investor is institutional or individual being that put money on the stock to trade the stock. Then, what is the stock market index? The overall performance of the stock market is usually tracked and reflected in the performance of various stock market indexes. Then there is two basic concepts of stock market trading. The first is the bull. The term bull market is used to refer a stock market in which the price of stock is generally rising. This is the type of market the most investors prosper in, as majority of stock investors are buyers rather than short sellers of stocks. Then, a bear market exists when stock prices are overall declining in price. Then, how to analyze the market cap, EPS, and financial ratio. Stock market analysis and investor may look at a variety of factors to indicate a stock. A problem future direction, up or down the price, Then the following are a few of the key financial ratios that investor analysis uh, consider. The first is profit price to earning ratio, then the debt to equity ratio, then return on equity ratio, and profit margins. Then there are two basic approach of stock market in investing. The first is value investing, then growth investing. The value investor typically invest in well-established companies that have above steady profitability over a long period of time. That's value investing. Then what about the growth investing? The growth investing seek out a company with exceptionally high growth potential, hoping in the real hoping to realize maximum appreciation in the share price. So that is the end slide of my presentation. I hope my presentation is useful for you and you find it enjoyable. Thank you.